Hey guys, Kunal here, Bulls on Wall Street. Short little video on a beginner trading strategy that you guys can use, implement right now, whether you're a professional day trader or a beginner. If you're trading a big account or if you're under the PDT, this setup will work for you and make money. And I want to talk about how important this setup actually is, because a lot of times people see a stock like Apple and they think, well, it's a large cap stock and it's really expensive. How can I even make money on it, right? Today it looks like it crashed, but it only moved like 1.5%. It's nothing, right? So if you're like trading with a $10,000, $15,000 account, you're probably sitting there thinking like, dude, what can I do? I get like 100 shares of this thing and make 50 cents, 80 cents. Like that's not going to really move the needle. Well, let me tell you how to supercharge this setup when you do it. So let me walk you through what's happening on the big picture, and then I'm going to show you how to intraday trade this for some big returns. So on the big picture, Apple announced its earnings on this particular day. So you see this big gap on it, right? Their earnings were shit. They have no growth, no future. They've just slowed down, right? And it's already a $3 trillion company. Like, where can it really go? So you're having this kind of post-earnings announcement drift. So now what's been happening over the last 1, 2, 3, 4, 5, 6, 7, 8, 9 days is you are consolidating that earnings breakdown. Guys, stocks, they get their power from consolidation. They get their power from basing. So when you have a post-earnings drift gap and then you consolidate right after it, you got a prime time opportunity for a short setup. And you can do this in reverse too on an up gap. So we have here what's just called a bear flag. That is the most tried and true shorting pattern right since the beginning of time. You get a thrust down, you get a sideways movement. It's going to look like a hockey stick. And then you want that 9 EMA curling down. And then when you break down that level, you can take the trade. So super simple. You can do this right now, no matter your experience level. So today, right, Apple had a little bit of a gap up. This gap up is a gift because the market is crap. And a lot of times people see the gap up, they start thinking, oh, we're going to bounce, I want to buy it. No, the daily chart is telling us what? Short this pig, right? Short this pig now. So what we want to do, we don't want to fall for that gap up. We want to take it as the gift that it is and look for a short. So when this thing goes green to red, this is your dotted line on your TC2000. We take the trade in the chat room. And it's about 176.55, right? So just a simple setup. Now, look, I didn't take huge gains on this. Like I covered half at 175.82, a portion at 175.37, and then some at 174.57. So in the end, I took like 2 points off those lottos, right? But how you want to supercharge this, for those of you guys trading smaller accounts or those of you guys that want to supercharge this, I take the puts on this, right? This is something I learned from Stock Hunter. He is our options guru. Best trader I've ever met, man. He's better than I am. Frick. Like he's been on fire all year. I learned this in his options trading boot camp, and he does these trades in his options room. So what I'm doing is, as this is going green to red, I'm hitting the nearest strike price, right? So that's your 175 on the puts, right? So as it's going green to red, and I'm hitting this 176.55, I'm adding the puts at 65 cents, right? As the puts are going red to green. So the stock's going green to red, the puts go red to green. And you can see, like, even at 65 cents, now look at my covers, right? 176.80s, man, the puts have already gone up 20, 30%, right? Into my next cover in that 174s, right? Look at where the puts are now. You're at 150s. They're up over 100%. By the time I'm done covering this thing, right? By the time I'm done covering this thing, I got myself some really nice, like a really nice little pattern over there. And, you know, we're doing this on large cap names all day. So like I end up getting out of this thing right around in this zone. But look at where the puts are at this. Man, they're almost at $1.50. From 65 cents to $1.50, you're up over 100 and something percent. My lottos were at 150% and some change. And the beauty is you don't have to have huge capital. Look, if there's 65-cent puts and you buy 20 contracts, that's going to cost you $1,300, right? If you can ride up this into the 140s, 150s, right, that $1,300 can be $3,000. Now, I don't believe in YOLOing and holding for home runs. I scale out along the way. That's why you start to see, right? I took some off, 175.80, right? It was only 70, 80 cents. Then I take some off again, 174.80s. I keep taking them off as it goes down, and I want to hold a quarter of those or a fifth of those for lottos and let those be the home run. So in general, when I'm up 20, 30, 40%, I'm going to take off a chunk, right? Then when it keeps going, I'm going to keep scaling out of this. And I love this particular stock with options because the options are cheap. Like when you try to trade NVIDIA options, the calls and puts are like $10. You know, you got to put in a lot of cash to like kind of move that thing around. But stuff like Apple, man, the calls are always 50 cents, 60 cents, $1 at the max. The puts are the same way. You can trade this effectively and make supercharged returns. And that's what I love about this. The stock only moved down 1.5% today. But those puts were really shredding. And then you can see even later on, and I missed this trade because I was done trading by then, it pulled back into the VWAP. And then you got another doubler basically out of this. So guys, short little video. I wanted to just go over this because this is a beginner strategy that anybody can use. Even if you are a pro, this is a way to make some awesome income. But if you're a beginner, this is just something easy, right? It fits into your brain. It makes sense. You have bear flag on the daily, green to red on the intraday. Then you hit the nearest strike price on the puts and then let it roll and scale out accordingly. And the risk management on this is really nice because if this thing goes green to red and it doesn't work right away, my stop is just over these EMAs. I'm risking 30 cents, right? I'm risking 30 cents on a $176 name. So the risk is tight. I mean, you're talking about less than 0.5% to really get right some big moves. So just something to be mindful of. I had about a 10-cent stop loss on the actual puts from 65. I think I put my stop loss at like 55. So you're talking about a great reward to risk trade. Guys, hopefully that helps. Let me know if you have any questions. Smash that like button. I love you guys. Let's talk about this trade.